Happy Friday, traders. It is 8:01 Chicago time on the 29th of July, 2022. Thanks for coming in and tuning in this morning in these really exciting markets for July. Pretty intense. This is episode number 2283. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. So let's start out today by asking our traders how this week has been for you. Have you stayed out of trouble? Did you make some money? Did you struggle? Is it a rough time? What do you have going on? Today, we're looking at the Convergence Trading pre-market summary sheet. We see that there's a mild risk-on sentiment, although that has come off a little bit with the release of the numbers. The U.S. Core PCE price index year-on-year came in at 4.8%, slightly higher than 4.7%. The month-on-month came in at 0.6, slightly higher than the 0.5. Inflation is still here. Personal consumption came in at 0.1, expected at negative 0.3. Wages went up 1.4%. The prior is 1.2. Employment costs went up 1.3% versus 1.2. And it just looks like the price pressure remains in place. So that's what came out and caused a dip in the markets this morning. So we were a little bit higher across the board. The NASDAQ was a little bit higher. I think it was trading around, where was it? Somewhere around 12,870. Currently trading at 12,810. So again, we've pulled that back a little bit. We're still technically mild risk on, and with having Exxon reported, Exxon is just gigantic. Their revenue was expected at $132 billion for Q2. $132 billion. That's Google times 2. However, they missed the revenue figure by 12.83%, which is kind of intense given the price of crude. But their estimates were stronger by 10%. So they had lower revenue, but they made up for it in earnings per share. Came in at $4.14 versus $3.74. Expected Chevron, which had $57.96 billion in revenue, estimated, came in at $68 billion. So they beat their revenue estimate by 18% and beat their earnings by 14%. Came in at $5.82 versus $5.08. Phillips 66, another oil company, also beat their earnings by 17% and their revenue by 14%. So pretty good there. Hitachi reported on Q1, missed its earnings by 64%. It's kind of interesting. It's just all over the place. Procter & Gamble's a big one that came out this morning. Came in at $1.21, missing its earnings by 2 cents at 123 estimated on higher revenue. They indicated that they're seeing pressure from consumers cutting back. Sony reported, AbbVie reported, and so on and so forth. There's nothing major after the market. After the market closes today, the overall picture and stance, as I said, is mild risk on. The markets are firmer following the Amazon Apple earnings. Pretty interesting. Amazon missed, but the market responded much stronger. Amazon up about 11% the last I looked. Amazon up 10.43%. Also, Apple came out. Apple pushed the S&P over the 4,100 mark. Apple's up 2.71% currently. The CHIPS Act passes, which allocates 200 and I don't know how many billion, $268 billion towards funding or subsidizing chip development here in the U.S. because the world is finally noticing that allocating your manufacturing to an offshore company, an offshore country that you also consider an adversary is not a good idea. 51 billion, that doesn't sound right. I think it's in the 200 something billion is the last I read, but that was over the weekend. Maybe I'm wrong. And then there's also the fiscal spending package, the Build Back Better, finally pushing through with Senator Manchin, who was the last holdout, reaching a compromise. So there's fiscal spending that's likely to come through, stimulating the U.S. economy. The S&P, by the way, crude taking a pop higher this morning, edging up towards the $100 mark. Crude high is 99.63, currently at 99.52. This morning we're looking for, we had several key numbers. There were a lot of key numbers this morning. Consumer confidence out of Japan was one. Missed. GDP growth out of France beat. Inflation rate out of France was better, 6.1 versus 6.2. GDP growth rate out of Spain was much stronger, 6.3 versus 5.1 year on year. GDP out of Germany was 1.4 versus 1.1, so those are all positive. Let me turn down my feed here. And then Eurozone GDP came in at 4% versus expected 2.8%, which is a lot stronger. That's year on year. Inflation came in better at 8.9% versus 9%. So these numbers out of Europe were better than expected. And what we have remaining is at 942 to subscribers and 945 to the public. We're looking for Chicago PMI, 942 Eastern to subscribers. We see the reaction at 942. The expectation's 55. And then at 10, we get Michigan Sentiment Final, which is a low tier number. The prelim is the one that's that the Fed pays attention to. That pretty much wraps up what we have and are expecting this morning. Let's take a look at the S&P. The S&P, let me just fix something here real quick. Just need to fix my chart. Ooh. Okay, the S&P, if you look at your summary sheet, the S&P is balanced this morning. It is skewing downwards, 221,000 contracts traded, so heavier than we've seen in the last couple of days. The inventory is 100% long, and the range is still anemic at 23.75%. The point of control is at 4,100, now at 4,099. Let's look at it. Technically, here we are, folks. I talked about this on Monday. Really important that we watched 40.16 and a quarter, and I mentioned multiple times that if we get above 40.16 and a quarter and hold higher, we're likely to push through very strong to the upside, because the structure, the profile structure is very weak above there. And the number to look for was 71, 73-ish, something like that. And we're likely to push right through, zip right through to the bottom of balance from a while back. What is this color? Holy crap. I never chose that color. So to pull... Annoying as hell, this thing. Can't find proper yellow. So to push right back into the bottom of balance, which brings us into the late May or the mid-May to early June balance, which is really important here. It's really important to recognize what's going on. And then yesterday, so that was done 2 days ago. And then yesterday, we managed to really squeeze higher. I found the long tough to get on yesterday, but I also was not at my best in terms of focus late night the night before, as well as last night. And so the rotations didn't kind of pull back for me to get into areas to get longs off in areas where I could define a good R factor. But the expectation, the market played out exactly as the profile had anticipated. We expected a push into 71, 73, and then beyond there, 81 and a half, which ended up basically being the high a day. Before the Amazon news. The Amazon news immediately pushed us to 4,100. 4,100 held. I was able to get a short off at 98 back to 80. Was looking for 88 and a half. It went to 88.75 and turned on the runner. And then Apple came in at 4:30 p.m. Eastern, and it just shoved us right through the 4,100 with a big sweep up. And squeezed us into the 41.11 range, 41.11 range after market. Currently, we're trading at 40.86, so we are pulling back to the edge, to this line here, to the edge of the balance of this balance zone in this box. We're pulling back just down to the edge, and it's really important from a structural perspective today, from the narrative. It's really important for buyers to hold above that 70, let's call it 73 area. I think the actual number is like 74 and a half. If I was to look at my, 74 half is the line. 74 half is the number, roll adjusted. The buyers really need to hold that 74 half so they have a shot at what price. If we hold 74 and a half and we are in this big balance zone, what do we look for on the aggregate, the big picture magnet? What is that going to be? Let's see if you can get today's quiz right. If we hold that area, what are we looking for to target? And what is the big magnet in this area? The big magnet is 41.19 and a half, 41.19 and a half. Call it 41.20, give or take a point. This will be the MC point of control. What does that mean? It means if we drew a profile around this region here and looked for the most traded price by volume, and by the way, let me not confuse you, this is a TPO chart, this is a time-based chart, it's not a volume-based chart. But if you looked at it by volume, you'd find that the point of control is right here at 19 and a half, and that, ladies and gentlemen, mesdames et messieurs, is the target now. That is the target. So if we hold and the market confirms that we are holding balance from June, the target becomes 1950. Is 1950 within range today? We're trading at 86. 1950 is way within range today. It's well within the daily range, expected range limits. It's able to get back in there. And if we get to 1950, I'd expect a reaction there. I'd expect it to pull back. I'd expect those who are long to dump at that price. So likely to stall, consolidate maybe, and pull back. And then it'll be the job of buyers then to back off and then try again at lower prices to push from 81.50 and higher, 81.50 being yesterday's high. Yesterday's RTH high. It's actually really 81 and a quarter. That's what's in play. Now, let's look at the sell argument, because look, I'd be a complete idiot if I came in here and said, well, the market's rallying, so I should only look at the long side. No, I always look at both sides. There are always 5 scenarios. Every day has 5 scenarios, really. And we don't talk about the last 3 or 2 or whatever, because generally they're not the big trades. But we need to look at the sell scenario. The sell scenario is that the market has gone far into Friday. This is a normal weekend. We are in the middle of summer. It is the end of the month. It is the end of the month. So there may be some profits getting booked today. And so what we want to see, since we're opening, and I'm expecting that they're going to sell this gap. They're going to sell. They're very likely to sell this gap. In other words, before we open, it's trading at, like I said, 86, 85. I'm expecting to see 81 and a quarter between now and the open, or at the open. I'm expecting this gap to be closed. And so if you've had a nice run throughout the week or for the month, you're going to want to book it. This is considered to be one of the best performing months since 2020. So I would expect some profit taking. So selling may create a lot of pressure, and if selling creates pressure enough that it gets below 74.50 and starts working itself down the ladder, and yesterday we had a lot of weak structures. So if we look at yesterday's profile, let's expand it here. If we look at yesterday's profile, we'll find that there are single prints throughout this profile. The structure for yesterday's profile is not all that great. So these areas here become target areas to fill, which brings us right back down. And I wrote these in the Head Trader channel, or the Maven channel, sorry. Don't have a Head Trader channel anymore. I wrote these. I said above us, 4121-ish. Below us, 4100, 4088.50, 4077.50, and then 4060 and 58. Those are the areas that I would expect immediate reaction on based on yesterday's action. And if it doesn't hold that 58 area, we're looking for 50. If it doesn't hold the 50, then we're likely to test all the way down to the IB high yesterday, which was at 40, I believe. Let's look at the IB high. IB high 41. So 41 becomes the key target. Now from here at 86, 41 is very attainable. It's 45 points. So that's the sell argument. So now, what does that mean? We're coming into Friday. At the end of the month, we have a good argument for the buyers and the sellers. Okay. The trend, the one-time framing is up. Okay. So that's where kind of the flow of the wind is more favorable to pushing prices higher. And that has been true. And I've been talking from that direction all week long, except that we have hit our balance price. We have hit this key area. Oops, too far. We have hit this key area. We have filled in all of these single prints. The job is done, and we have to be aware that it is done. And so the expectation is this is likely to be responsive right back into the prior settle. And if it's not able to bounce back up, hold, and now move towards the 41.20, 21, 19.5, whatever. It depends on if you're looking at TPO, VP, and what the resolution is of your volume profile, if it's tick-based or minute-based. This is what I expect. I expect responsive selling into the prior range. I expect a tag of the prior settle. The immediate over underline in this area is the 4060, 4058 down here. Okay. If it holds this, then there's a strong chance that we would end up at 4120, if not today, Monday. But if it responds and is not able to get it, and it gets trapped in yesterday's range, then it's very likely to entice those who are weak longs to get rid of their position, or at least to lighten up their position. And if they lighten up their position, they're going to be sellers, and it's expected to trickle down through the 40.50, 40.40, and base at the 40.40 for a bit before the day ends. Those are the two main scenarios. Do I need to draw that for you? I hope I don't, because that's a lot. I'm talking a lot about the if-then. So imagine we are command and control, and there's a battle going on, and we have a drone, and our drone is looking at the battlefield, and this chart that's in front of you is the battlefield. And so the drone is buzzing around in a circular pattern, and we're seeing, and what we're doing as generals, as the um, joint chiefs of the armed forces, is we're saying, okay, what happens if this happens, and then what's our move if this happens? And that's essentially how we want to trade the narrative. And then based on that, we generate a price map. Okay, these are, if they take this fortification, then we move our troops here, then we attack from the flank, blah, blah, blah. Think of it this way. This is what's happening technically, and this is my approach. This is my auction. This is how auction theory works. It's successfully tested here. Okay, we've taken over this area. Now we can push forward, or we have attempted and we failed. Therefore, we're likely to pull back. So pull the troops back to a stronger position, then attack again. That's what buyers and sellers are doing all day long. That is the point of the auction, and the goal is to find equilibrium somewhere. And we know that the equilibrium point in this area is in that 41.21, 41.19 half region, and that's the expectation for today, well within range. And if it's not able to hold this equilibrium point, then it is likely to generate a new one in the gap zone, or in this weak structure zone that we're looking at here. So it's likely to generate one between the 40.80 and the 40.40. It is likely to generate, it's almost like at war, it's like a forward, it's called an FOB, a forward operating base, right? You don't want to travel long distances with your troops to stage an attack, but when you take territory, you build a fortification, which is an FOB, and now you stage your attack from there for the next push, and that's new balance. That's kind of what this does. It creates an area from which, a balance area from which you can target the next play. Okay, so while I'm rambling on, we'll do our Friday Where Are You Located feature here, brought to you by EdgeClear. Type in your city, state, / province, and country. If you're open to being contacted by other members who are watching the Trader Bite and who will watch the Trader Bite across Twitter's media and YouTube. So approximately 2,000, 2,200, 2,500 people a day. You can type in your Twitter or Instagram handle if you don't mind being contacted by someone nearby. Otherwise, just tell us where you're from. Look around, see if there's somebody nearby, and see if you can get in touch. The easiest way to get in touch is to share a public handle, which I would recommend Twitter or Instagram for that, because it's easy to block people and so on. Okay, so look around, see if we can connect you with someone else. The traders trade better together. That's a fact that I've seen again and again and again. That's the purpose of convergent trading, is to bring traders together and to create accountability groups and so on. It is Friday. It is the end of the month. It's been a heck of a week. So just, don't be dumb. Don't give away your money. And if you have to lose gracefully, lose quickly, and lose within plan. Good luck, and I'll catch you on Monday morning. Take care.